NFPFriday.com, and we are sponsored and powered by TradeView Markets. Check them out. I want to just quickly review what I said last Wednesday, just prior to the Fed. It was my belief that the proper course of action, reacting to the reaction, was to buy weakness in FX, sell the dollar strength. Here we were on the Fed. I actually put out the buy level at $1.80-ish. The low was 96, close enough for government work. And we had a rally, but the euro really put in the weakest rally across the board. Okay, pound outperformed. My preferred long that I've been pounding the table on for a month has been the Aussie. And if you can see on the Aussie here, we did finally break out of this falling wedge and actually retested it on Friday. We could get another retest if the dollar bounces. My intuition tells me that's a possibility, that the dollar does bounce, and that we should get a pullback in Aussie. Also, I think the lows are in for cable as well. Another formation was a falling wedge. I'd use any weakness back towards the 120 level as a buying opportunity in cable. So I do think, though, that there is a possibility because of the weakness of this recovery in the euro. And remember, the 103.20 is the make or break line, the bull bear line, because it was a very important low, not just recently at 103.5, but going back to 2017, a very important low as well. So until we get back above this level, 103.20, you still have to consider that the euro has not bottomed, although I do think that's coming. When I look at the euro short term, the last trip that we had down here towards the 120.90 level was, right here at 197, that we might even be able to revisit this level and maybe even take it out by a bit. The only thing that would change my mind now would be closes back over 103.20. When you look back at my calls on the yen, I was 100 pips early. I talked about, I think it was, mid-July, a 138 sale. It's on record on the video. Looking pretty good here, the 138 sale, although it was 100 pips early. The macro call was spot on. I wouldn't start chasing the yen to the downside either. I'd be waiting for some type of bounce here, although I do believe eventually that we could head down towards a low 120 handle on that. Looking at Canada, that was another preferred short with the dollar selling off. I'd be waiting for rallies back towards 130 to give another shot, and what might be behind it is yields have cracked pretty good, but if we get a little pop in yields, and they are pretty overdone, we could get some type of dollar rally, maybe back over the 107 level, back towards 108. So just feel that this 105 level in the dollar is very important. It was a prior high right here. Okay, this 105 level. So we've retraced to it. We did not have a monthly reversal. So you may want to look for some type of retrace from the move that we had up at the highs to recent lows for a better dollar shorting opportunity than we have right here. Something that's significant happening right here as we speak. I've been talking about the WTI. And really, the oil shares, if you look at the strength that we had in the market, they rebounded, but they were still looked like rallies to sell in the oils. I'm sure that's part of S&P weakness. Due for a little pullback here. I don't think it's over yet. I still think that 4,200 is going to be the battleground, that we're going to get a pullback and then maybe one more high. And the reason for that is look at the RSI reading on the 4-hour. Still pretty powerful. 2-hour, we're starting to diverge, but over 70. So if we get a pullback and then rally above these highs, then you'll start to have some momentum divergences developing. You had a great move in gold and silver. I know there's still some people thinking that we're going to trade under this recent low of this major support level that we held. So here's your monthly. They still think we're going to have a breakdown. I'm not in that camp anymore. I would look for pullbacks to buy there, as well as silver. In fact, one of the best calls I made last week was I did show the 3 drive to a top and the gold silver ratio. This was a beauty. I think it's an important high. So I think we're on our way to the 200-day moving average, but this too could correct. So after last week's huge move with risk, the Fed saying what they said, initially there was a sell-off in euro and cable and a pop in the dollar that all failed. Gold and silver had bottomed before that. Silver, I'd be looking for, if there is going to be a pullback, maybe back this 2040 area is important. That's another reason I think there'll be a pullback. It's not only the 50-day moving, but it's also the prior low of 2040 back here in May that we took out. So, kind of a perfect place for it to pull back. Maybe we get, just looking at a 4-hour, maybe a pullback towards, 1920, 1940. Looking at it here, here's 1940. Could be a nice area to buy. And copper is down as well today. But that gold silver ratio, I think, really was a very important signal for long-term precious metal bulls. And this is why I think the dollar might have a chance of rally. I'm going to go to the 10-year here. And, we had this breakdown under 272. And it's taking its time accelerating through this breakdown. So if we get back above this 275 level here, maybe we could put in some type of rally to 3, maybe 320. We'll be getting the NFP on Friday. What if it's still strong? One of the strongest parts of our economy is the employment picture. A lot of it is structural, because a lot of people during the Great Resignation haven't had to or want to go back to work. So I'm thinking that it's potentially setting up a little complacency here, and we get a little pop up here in yields, and that also could be the reason behind a pullback in FX, metals, S&Ps. If you're enjoying what we're doing here and it's helping you, adding value to your trading, hit that like button, spread the word. Mike will be with you in about an hour and 20 minutes, and appreciate your attention. But remember, don't just count your pips, count your blessings. And we'll see you guys. I'll see you guys tomorrow with Mike for our Tuesday updates. Good hunting. And this is Dale Pinkert with TradeGateHub.com, and we are sponsored by TradeView Markets. TradeView Markets is a broker where you can trade every instrument with competitive spreads. And that'll be a wrap for today. Good hunting. Don't give back your profits. Take partials on everything. We had nice moves, and the Aussie, the table was being pounded for 3 weeks. Let me just talk about this. When we were down here on the throwover, we were diverging, then we started putting in a reversal week, then we threatened the breakout. Now we have a breakout, maybe one more test of this wedge line before we start heading into the 72 level, 73. Longer term, I think we could see an 85-cent Aussie. So that's a wrap. I'll see you tomorrow with Mike. Good hunting. Adios.